Hello guys, welcome back to another video, and in today's video I want to give you guys the usual weekly market breakdown where we're going to take a look at the dollar index, the Nasdaq, the Dow Jones, the S&P 500, gold as well as Euro, USD. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis, and if you enjoy the video, please smash that thumbs up for the YouTube algorithm. Also, firstly, a very special thank you to the members of the channel there as well. I appreciate the support, and also thank you to everyone that has been showing their continuous support to the channel there as well. Now we're going to start with some fundamental data that we had last week, see how that's going to carry into the new week, and then see what we got next week, and also look at what were some of the reasons that we saw the Dow Jones tumble even further, having a very bad year as well. So last week we had the PMI, excuse me, we had the flash PMI services came through at 49.2, which was good. Fed Powell spoke and speaking about the usual stuff, interest rates and unemployment, and the labor market's doing good. Then we got the consumer confidence, which is quite surprisingly 108, but I guess that's purely based on the fact that the price of the US oil had come down tremendously. So it's good to see consumer confidence going up, and that basically means that consumers are expecting the economy to recover over the next 12 months there as well. We got the core PCE price index that also came through at a 0.6, previously 0.0%, obviously expecting the stock to have positively reacted from that, but that is not what happened there as well. Next up, we're going to look at this article from CNBC that was published on Friday. It says here Dow Jones tumbles 500 points on Friday to end September down nearly 9%. And the worst part is that is across the board for stocks. The S&P 500 is down there as well as the Nasdaq. So you can see here the S&P 500 fell at 1.71%. Back to 28.725. The Nasdaq also down 1.51%, ending the day at 10,575. Meanwhile, the S&P 500 again down 1.51%. Also on Friday, everything is just down. The Dow Jones is down. This has been a tough environment for equities in the fixed income, both something that we expected given our views around the Fed keeping interest rate hikes. And basically, in the near term, we are likely to have a continued market volatility with downward bias as we head into earnings seasons soon there as well. Earnings seasons, not too much expected from that because we've seen some terrible results on the stock market. Also, to keep in mind, we do have the NFP data that's coming through on Friday that I'm expecting to be negative because with the company valuations dropping so hard, we can see the Nasdaq has been very bearish. Finally reached the target that I said it was going to reach. But the Nasdaq has been very bearish. We expect the market to continue lower, potentially at this levels of a year. Now, all the companies listed on the Nasdaq also getting affected by this because this is how their evaluation works. And the company's not making money. They can't sustain people. I'm definitely expecting the NFP to come through negative there as well. Now, back over to the technical analysis. Now, if we start on the monthly time frame, we can see how the dollar index is now again testing and rejecting this previous level that I have spoken about. This level acted as a level of support. The market broke below that level of support, came back to test it as a resistance for the first time. We have this massive impulse. After an impulse, you also expect a correction, and you expect that correction to take place to at least the 0.382. Now, we can see that this level over here previously acted as a strong structural level. Now, this is 0.50%, where the market broke support, tested it as a resistance, broken above resistance. But this level over here had broken above resistance, and it's now acting as a level of support. So we're going to use this as a guide for we could potentially see further dollar weakness in the market there as well. Let's just remove all of these drawings very quickly. There we go. Now I'm just going to remove this here also. Next up here on the weekly time frame, what do we have? Now, from a weekly perspective, we can see this is the structure that the market created. This level over here acted as a level of resistance, broken above that. We can definitely expect the market to come back to test it as support before seeing a further continuation to the upside. On the daily time frame, the market had just broken above the strong level of resistance that is now acting as a level of support. Now, once support gets broken, resistance gets broken, then becomes support. So basically, based off where we are now, because we're expecting the market to obviously go and test this previous level of, this structural level over here, the bias on the dollar index will remain bearish. But the only way for us to see that is if we do get a clear break below this level, then on the retest, we can definitely expect that continuation to the downside. But because of positive fundamental data, we could potentially see the dollar pull back at least 50% before continuing lower. When the time we get to that NFP, I'll probably say they boom spot on just there as well. So that's basically how I'll be looking to approach the dollar index this week, and then we can probably obviously take it from there. Once again, next up we've got the Nasdaq 100 on the monthly time frame. We're at that massive impulse, we had that correction, the market printed support over here, broke below support, came to test it as resistance, and the market had continued down as we initially anticipated. To take your Fibonacci from the high to the low of the impulse, we had the 61.8 rejection as a confluence. The market had still not came to the actual target, but the market came back to where we initially anticipated to go. But we can definitely expect the market to continue lower before continuing higher. The market's now trading at a very strong weekly support over here. Now we can see the market is currently testing that level, but again, there's no way that that's going to hold. So on the daily time frame, we can see the market had broken below very important support, and the market is now going to continue lower after tested that previous level there as well. The market is busy printing an impulse. If you take your Fibonacci from the high to the low and take it to at least here, we can definitely expect the market to continue lower, come back, test that previous level of support that would then be turn resistance, and then continue lower there in the market also as well. Now that is the way I will be looking at getting into the Nasdaq next week if I do decide to get in there. Also, next up we do have the Dow Jones. Now the Dow Jones is a printed similar price action on the monthly time frame, but we can see the Dow Jones still has some room to the downside, probably potentially till there before we see a pullback. Now here on the daily time frame, we can see the market had also slipped below this level. Going into next week, I expect a clean pullback before a continuation to the downside, and that is basically what we can expect from this market there as well. Next up we got the S&P 500 that prints similar price action there as well on the monthly time frame. Like I said, we still have some room to the downside for the S&P 500 to move, broken below a strong structural level just like the Nasdaq 100. So once again, we can expect a slight pullback before that continuation to the downside there as well, my good old friends. Okay, next up we got gold on the monthly time frame. What do we have now? From a monthly perspective, we can see gold finally broke below the strong level of support, and you can expect this market to pull back and test it as resistance, but gold had finally broken out of this level that it had been trading in for almost a year. So gold on the monthly time frame is we can expect this downward momentum to continue, potentially come and hit this levels over here, and that is where we can expect gold to go next on the weekly time frame. What do we have here from a weekly perspective? Market had printed very strong structural level. If you go further, you can see here this level was a very strong structural level, acted as a level of the resistance over there, came to test it as support multiple times, broken below support, giving us a confirmation that we can definitely expect the move to the downside to continue, and for the market to go and test the previous monthly support there as well on the daily time frame. What do we have now from a daily perspective? We had the market that had been stuck within this consolidation. We had a clear break below that, market pulled back, tested that previous level of support as the resistance, and failed to close above that on the daily candle there as well. Now again, going into next week, we can definitely expect gold to continue lower as we anticipate the market to continue lower on fear of higher interest rate hikes. And also we could, if gold does break and close above that level, then yes, by all means, I will then look for buying opportunities, because in doing so, will the market then print this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Next up, we've got Euro USD. Now, Euro USD fell below everything that you could possibly think about. The market broke below the strong level of support, and we can definitely expect Euro USD in the long term to come back to test it as resistance. The market also finally came back to this level. If you guys remember, I said that we can expect the market to come back to test that level, which is exactly where the market had got into there as well. Yeah, on the weekly time frame, what do we see now from a weekly perspective? We can see how the market had broken below the strong level of support, came back to test it as resistance. There's a high probability that we can expect the market to continue lower there as well. Now on the daily time frame, we have this massive impulse, soften impulse. You expect a correction, and taking off Fibonacci from the high to the low of the massive impulse, we can see how the market tested the 50%. Now, if you zoom in very closely to see, we can see that this is the previous level of support that the market had printed. Now, I expect Euro USD to continue slightly higher and then potentially continuing lower, as we expect the Fed to continue to hike interest rates. That's all from my side. Thank you for your time. And as always, cheers for ears.